What's happening, traders? Welcome to the Accumulation and Distribution Pattern Recognition Series Part 2. Part 1 was us going into more depths about the strategy, the origin, why the market does what it does, and how you can capitalize on it. And this is going to be Part 2 for you to train your eyes. And this is something I also recommend that you're also doing on your own time as well as you are learning this particular strategy. In today's video, we're going to be taking a look at USD JPY. As we start to go over on the chart here, we're going to be starting off on the daily time frame. This is a strategy that doesn't just work on gold. I trade predominantly gold, but it works on a wide variety of different markets as well, because the concepts is price action concept that's derived from just the concept of liquidity, right? Money and the different states of the market. So it's something that you're going to see across different markets, and it is important and for your own benefit to at least understand how to trade it. Something you can add to your arsenal if you want, but if you're watching the series, I'm guessing that's something you're interested in. Diving into today's video here, we're taking a look at USD JPY. When you come into the market and you're looking for this accumulation and distribution pattern, that is your entry criteria, right? That is an entry strategy. It is not going to change your analysis in terms of how you see the market. When you come in, you still want to do the higher time frame analysis. And when you take a look right now, what we see is buyers are dominant. The last couple of days, buyers have been dominant. We have, huge bullish down here. Sellers try to dominate, but they failed, and buyers essentially, pushed up. And the next two candles have essentially almost engulfed this bearish candlestick right here. So when you're taking a look at this right now, you're asking yourself, well, whose market am I coming into, right? Are you coming into a buyer's market, or are you coming into a seller's market? Based on even the historical data here, you can also see that we are still in a buyer's market outside of this big bearish decline that we have here. So the likelihood that price is going to continue moving higher is still there, right? So your bias, you still want to try to acquire that and go through this process of, looking at the daily time frame and plotting out some of the highs and some of the various points that price is going to be reaching for. And based on this particular example here, we know that if buyers continue to dominate, they are likely going to reach for this level right here, this high, and then onwards. So if we go over to the 5-minute time frame, this is going to be our execution time frame. But when you're looking to execute, right, you're paying attention to the higher time frame. And the reason we started from the daily time frame is so we can use that to give us a bias in terms of what we should be doing, because as retail traders, we don't control the narrative, right? Our goal is to trade with the big institutions. And even if you are trading a strategy that is the holy grail, even if that was the case, you still need to trade that strategy at its ideal market condition. And one of the best strategies that you can possibly trade is a strategy that you trade in line with the trend. So what we've identified is that there is a strong likelihood that price is also going to reach for this level. What we have here is we have an accumulation zone, and this is the accumulation. Price stayed within this range from here and here, tried and tried and tried and tried, and then finally we got the breakout during the New York session. Price essentially never traded back into this level. This happened on a Monday, and this was the first sign that the market has distributed to the upside, and we see the clean and clear breakout right here, right? Beautiful candle. Ideally, it would have been great to see a retest into this level, but if the trade was taken, you probably would have still, you would have still made money. But from the accumulation standpoint, you want the market to trade back into the zone. So this zone is still just as active, as strong, because the market hasn't traded into it. And now we're seeing price essentially trade into it the second day after we got the breakout, which was on Tuesday. So as you come to the market now, you've looked at the daily time frame, you've seen that price traded further into this level, which is exactly what you're looking for. The next thing is your stop loss. I personally do a stop loss of 30 pips or 35, within the 35 range. I'm not looking for anything crazy. I am just looking for that stop loss. The best thing that you can do when you're entering in an accumulation zone is to wait for the bearish momentum to die down, because sometimes it can be quite intense. And what we have here is we have strong bearish momentum coming into the market, and we want to wait for that to start to die down and for more buyers to come into the market. And based on what we see right now, it looks like we're getting that to die down. So we can wait for another candle. Beautiful, right? So we see that right there kind of gives us our signal, and we can say, hey, you know what, we're gonna go with a long trade right there as price is trading out of this level, and we can do our stop loss at about 30 pep. Boom. Now, in terms of your take profit, you have the overall objective, which is the daily time frame, right? And if we take that, that is going to be pretty much a 1 to 2.6, right? You can even set it just slightly above to make it 1 to 3 overall, because price will likely trade above this level. But now you also want to set targets for yourself. Where are you likely going to take something off the table? I believe as a trader, you should focus on managing your trades, and you should try to put yourself in a position where, hey, if the market gives you some profit, you can at least take something. And this right here would be halfway, right? So that would be about 46 pep. That could be your second take profit. And the way you do that is just by finding critical levels, and this could be a supply and demand level. It could be a major high where you take something off the table. It could be your first major target in case the market doesn't continue to run. Let's take a look here, and what we see here is the market ended up taking out the high, trading into this level, and overall you made half of your overall trade, but you can still let the market run and see if price is going to continue pushing. We can go over to a higher time frame. We can scale over to the 15-minute time frame just so things are moving a little bit more. And what we see here is after price took out this high, we got a little bit of a pause, and then the market continued running and ultimately breaking out of this level. So this is the strategy. This is the accumulation and distribution strategy. The main thing is you take a buy trade based on the initial breakout, or sell trade. In this example, we took a buy, which was our entry right here. We waited for price to break out of this level, give us the distribution, trade back into it, and we placed our trade as the bearish momentum was losing steam and more buyers was coming to the market. Based on the market you're trading, you're going to get different reaction in terms of how fluent price will move. This is USD JPY, and USD JPY's tendency is very consolidation. So this is actually a really great strategy for this kind of market, because it spends a lot of time consolidating. It doesn't just always trend, but when it starts to trend, it really starts to trend. That's something to keep in mind. Gold moves a lot faster. This, in order for us to capture this much movement, it took us pretty much a day, almost 2 days. Whereas something, with gold, we can capture that relatively quickly. But it's not about the amount of pep, it's about the setup, right? And what you're doing here is you're going into the market, you're looking at the setup, and you say, well, this is the accumulation zone, this is the first distribution, and then price traded into the zone, and boom, I took my entry point in the New York session, because you want to be taking the trades during the session that you are going to be trading. And this happened during the New York session just about 10 a.m. and we saw price essentially trade above. You held the trade for quite some time, but you ultimately got your overall objective. And boom, what you do now is you go over here and you take a screenshot of this. Boom, screenshot, you add that to your file, you continue to accumulate and collect more patterns. So that's the video, guys. Hope you found it insightful. Till next time, hope you're out there living free. Cheers.